All right. So welcome back. Good evening, good morning, and good afternoon to everyone. Hope you can hear and see my hear me and see my face here. I don't see. I'm not sure you can see here. Let's double check very quickly. I don't know if the camera is on. I don't see. I don't see. Let me see. Okay. Okay. So welcome, and this is the FX Street Tokyo Open Live Room. Thanks for joining in again today. It's 8:05 p.m. time here in Toronto. This is a daily show in which we feature real trading at the heart of the Asian session with me. So we'll do 45 minutes, 1 hour here. We had a little introduction yesterday. I just want to remind to everyone the disclaimer. Trading is risky, and trading Forex and derivatives, futures, options, and CFDs, it's risky. And you know that. All off-exchange transactions involve substantial risk of loss, and also in exchange transaction, by the way. So trading is not suitable for everyone. You may lose all your money and more. You can get into debt, because the use of leverage can magnify gains as well as losses. So be very careful, and read also the FX Street risk disclosure on the website. The trading idea I give in this webinar are for educational purposes only. So I'm sure you understand that. So let's actually dive right into the charts here, and I'll open the chart as well. So any question you might have here, feel free to ask. You should be able to see the chart in a moment here. And if you have any questions, I'm going to answer your questions as well, of course. So feel free to write down. And I missed some of the questions yesterday, but we will catch up. We will catch up today. All right, so what you see on the screen here is the current intraday chart of the euro-Australian dollar. You will remember that yesterday we talked about this. Today, of course, we had that huge spike higher on at 2 p.m. after the FOMC, and I think today it's a very good example of how we have to manage and stick with our trades without being, worried or kind of chicken out of a good trade during news. I think today we have seen such an example, and if I switch here on the daily chart of the euro-Australian dollar that you see here now on the screen, you can see that when you put everything in perspective, right, things are actually very, very different here. When we look at this chart here and we put things in perspective, what do we see here? We see a participation again at that 157.08. And the market actually participated there. This is now 2 days ago. So the new bar here, this is today, and this would be the Thursday bar, if you wish. This is the open that has already happened. The open at the Wellington market in New Zealand has happened already, and now we are seeing a continuation during the Tokyo Open. Okay, so if you put this huge spike today in the context, you'll see that nothing has changed basically. Okay, so if you got any questions in relation to this, don't let my recommendation here would be, general recommendation would be to not let you be sworn away or kind of being influenced by the news. The news typically are going to follow or be compatible with the position that is already in place. Okay, so do you have any questions in relation to this chart? You will let me know. Okay, so what we're going to anticipate for this market is still a test of that 152.30 that I actually mentioned yesterday. And if you look at the market, the way it is kind of positioned at the moment, you know, that's very possible there, right? The way it's positioned, he opened at the current price 155 basically, then he went higher a little bit into 155.63, so 63 pips. It's quite sizable, but not for this market, because this market can give you trades in the region of risk of 30, 40 pips sometimes. And so 63 pips wouldn't be a lot, would be 1.5 unit of risk here, so it's not a big move. So my daily candle close at New York time. That's exactly that's correct. In fact, when I show this, thanks for asking that, Jax, because that allows us to clarify the environment in which we're going to work for the full year and beyond. And as you can see here, these vertical lines are the delimitation of the session. So the first bar that you see just on top of this line is the 5:30 bar. So the market reopens at 5 and it completes that bar and then goes on. So the market reopened at 5 here. We saw the market moving higher. Now what we see here, very interesting, yes, 5 p.m. I use the end of the bar generally. So I will call this the 5:30 bar, and because it ends at 5:30 and gives me the full information at 5:30. Okay, so it's exactly the same. The pair is Euro Australian dollar, Rory. That's what we are looking at. Okay, now you will remember that, and I just want to say hello to everyone here. Thanks for joining in, Jax, Rory, Pantelis, Matt, Desi, The Grace, Ola Ralph, Ray, KW, Label, Lopez, Joe Adinda, Hi Adinda, Ryan Gandalf, Beetle, Roland. We have two Rolands, and Maya, BW, Roland again, Sam, Sparky, Ali, and Joe. Thanks a lot for joining in. And feel free to shoot any questions here you might have. I'll be very happy to answer this question. Now, before I continue, though, most EST brokers close at 12 a.m. EST. Well, you know, this is a 24/7 market. We want to follow it 24/7. And, you know, as you see these blue bars here in my private room with my students, we trade some of these bars as well. We trade the Euro session, which is the most important one, as well as the US session occasionally. Now, let me put everything in context here for you. You will remember that I mentioned this, and again, I'm going to mention that again. I will soon start removing some of the levels here. As you can see, we see this price moving lower because this price has actually traded an important setup, which was the setup that I showed here again, 157.10. And this is, if you don't use risk-free trades, that's unfortunately depends on, Rory saying charts are very fuzzy here. I think that depends a little bit on the quality of the connection, as well as YouTube. But I suppose that that's you know, generally the quality, of course, is a little bit lower, but it's good enough to understand what's going on here. Now, this bar that you see here, the last green bar that I'm indicating here, this green bar here was in response to that news. Has that changed the resolution? No. And actually, I think for if you have problems and the view is fuzzy, you can use you can use the player setting and change it to 720 pixel there, as Pantelis has suggested. Thanks, Pantelis, for that. So Rory, you can change to high definition there. Okay, fantastic, very good. Okay, so again, I mean, I'm jumping from one to the other here, but I'm still on the euro Australian dollar, and you've seen this reaction here. It's very easy if you don't know what's going on to be capturing this kind of move. You have to be very, very careful. If if we understand what the market is going to do and where are the algorithms and where the smart money and how the smart money is positioned, this kind of move should not actually worry you. Okay, and I've been looking at this move, and I knew that this move was not coming from any important level in the chart. It was just a response to news. Okay, and so we saw that move there, and now that move during the news. So this is 30 minutes bar. In 1 hour and a half actually went higher and went to break the old way of way back there on this spike, but this is not really important on that news. Should I see anything yet? Yes, Lee, you should. You're gonna see the charts here. We are on, so I think everything should be okay. Just wait a little bit for the image to get there. You should be able to see my face here. Welcome, and I will switch the charts again, and we continue from there. Okay, so if you have any questions, as I mentioned before, you can write them down. So what I was saying is that we saw this break here, but didn't change, this move higher didn't change the current setup for this market, which is still the daily that we saw before here. And tonight I'm going to confirm my target at 152.30-35 here in this area. And as I mentioned in the yesterday review, this would be a 21 reward to risk move, and that's the kind of move that we want to get. So, Joe, if you refresh your screen, go on the address of your Windows and refresh your screen. Okay. So as I was saying, we are still into this measure move. It is my belief that within today, the day of Thursday, we're going to basically cover again, very probably, the distance and get back to lows. So those lows do not have a special importance to me at this stage. Okay, so I'm just continuing to look at this market from a short viewpoint. And this market has had all the opportunities to continue higher if that was the case, and in fact there was participation at these levels, 155.06, but then the price was not capable of continuing higher. Okay, so that's just a reaction to news. As you can see, this market is going back to its norm, which is the direction that algorithms have set back on Tuesday here, the 26th, January the 26th, and that's where we're going to see this market moving to. And very soon, actually at this moment, this market is challenging the 154.67. There are algorithms on each of these levels here, and some of them are on the smaller time frame, some of them are on the larger time frame. That will try to pick up price and try to move the price around. Do you enter right on your line, or do you wait for some sort of confirmation? I always wait for confirmation, and I use a proprietary technique which is called FibStalking timing. Okay? I never ever enter at the level. And if you stay in the room, I will explain more and more about that. But in a nutshell, all these sequences and measure moves that you see here on this larger time frame, they basically replicate themselves on a smaller time frame. So before we would enter at this level, let's say that we were looking for a long here at this level. We are not going to look for a long. Let me be very, very clear, okay? Actually, let me show my face so it will be very, very clear that I'm not looking for a long here. Okay, look at my face. I'm saying, no, 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 I'm not looking for a long. This is going down. So when we go back to the chart here, you see that there is always some sort of participation there. Now, in order to get involved there, we need to see all the sequence that we can see on the smaller time frame here to fail before we can get higher. And there is a proprietary technique that I use with this method, but we will also use the timing of the continuation style that we can use for similar fashion. Okay, so as we go, I will show example of that. Okay, so this is it for this chart. I'm not worried about longs picking up this price here, because the participation short initially has come from much larger time frame. Indeed, it came from a daily time frame here, as you can see very clearly. So another confirming factor is given by those pairs that are kind of attached to the US dollar. So one of these would be the US dollar, Japanese yen. Very technical, very technical market. And this market is pushing higher at the moment. So with this market pushing higher, I anticipate the euro and the euro related pairs to push lower. Okay, so this is something that you will need to keep in mind here. So is there, yesterday I mentioned the 8 markets I follow, and the 8 markets are, 4 of them are related to our European crosses, and they are crosses with North America, as well as with Australasia here. So we have the euro dollar, which is king, of course. Around 63% of currency volume of the US dollar is exchanged against the euro. So this means something. And indeed, you will very often or always see the euro dollar trade against the dollar index. Okay, and you can use the dollar index as a benchmark for that. Okay, welcome, Peter. And if you have any questions, you can write them down. Yesterday we were actually kind of, it was more of a testing day, or we were actually starting right away, and today is going to be different. We I'm much more confident with the tool as well, and any questions I'll be able to answer them. So let's go back to the charts here. Any questions, write them down. And as I was saying, I mean, we have some of the pairs that are European and European North American plays. We also have a European Australian play here, which is the euro Australian dollar, very technical market. And then we have the euro Canadian, the US dollar Canadian, which is a North American play. And then we have the classic euro US dollar. The reason why I have this market is not others, not just because I like and they are highly followed pairs, but most importantly because they have very high volume, and they respond very well to the levels that I use in my trading. Okay, so that's the reasons for it. Now, if you are looking for technical pairs, very high volume, by no means you can follow these pairs. On the right side, I have Asian plays. There is a North American Asian play, US dollar Japanese yen, great market, and it relates very well also to the euro dollar. So when you will see, it's often when you see the US dollar Japanese yen moving higher, the euro dollar is moving lower. It's not always the case. Sometimes one of the two lies. It's not always the same. You have to be the beer for being late, Peter. Peter, it's on you tonight. Okay, so Peter has the tab, and as we finish, we're gonna come and share a beer with Peter. So among these Asian plays, I also have a pure Asian, two pure Asian, Australian dollar and Japanese yen, as well as the Australian dollar, New Zealand dollar. And then I have the classic Australian dollar, US dollar as well. Very, very technical as well. So out of these pairs, do you, you know, if you have any preferences here, we can pick one of these. However, before we get there, let me do an analysis of the SP500 here using the method. And on this chart, you will see sometimes also some of the traces I do for the continuation style that we're gonna look at in detail. And by the way, tomorrow I have the last webinar dedicated to the to the continuation style. If you want to join, you know, feel free to join. Tomorrow I'm going to show a way to increase expectancy as well as reliability on the method. That's very, very important. I study expectancy and reliability of all the methods I used very closely. And I made a study in 2012 in which I showed ways to improve breakout entries as well as breakout risk management. So if you're interested, go to my page and you can actually subscribe for tomorrow webinar. We will use some of those results in our trading here in the room. Okay. Now, before I hear from you, if you have any pair you want to review, what I'll do, I'll do a quick review here of the SP500. Why it is important to look at the SP500 at this stage? Because this market could be on the you know, it could be on the really close to the cliff here. And now, let me show how I have modeled this market recently, and actually modeled this market since basically October last year. Okay, so this market is moving higher in extensions basically since 2011, and in October I spot this level with 3.5. October last year, this is October 2015, sorry, 14. I spot this level with 3.5 weeks in advance, and this was an extension from a level that I had traded already. This was the 1606. What you see here on the screen is the continuous future SP500 E-mini future, and I mentioned this in my newsletter. And by the way, if you want to subscribe to the newsletter, you can go on my website and you can subscribe. I actually should be able to still see my face here. Yes, I actually send out some reviews in the additional reviews on Sundays as well. So if you want to receive that, by no means, www.FibStalker.com, and you can subscribe to the newsletter. This measure move worked at 1791. This price at the time was slightly different because the continuous contract actually changes the level as the continuous contract is calculated. But in terms of position of the level, was actually the same. And this market went into the first target, 2062, as you can see here. It took a few weeks. This is a weekly chart. I'm not sure you see the chart, so let me share it. So maybe you can actually see the chart. So what I was saying here is that 1600 tracing from this level to the highs, and mind that you can do this exercise before the fact. Okay, and when we look at the hard right edge there, the edge that is so hard to understand and trade, right? You know, when we do that, we know that we can do that with a few weeks in advance. You keep tracing these levels, and at some point the high is in place there. There was the 1975 level, Should be able to see that level. Give me a yes if you see that level. And then 1 week, 2 weeks, 3 weeks, 3 weeks and a half, we get into that 1791. Okay, so these levels are real. There is real participation at these levels. And I saw your question, Lucas. Let me finish this, and I'll go back to that. Thanks for the question. So once we got participation there, as I mentioned before, it's not that we just buy right away. We need to see the sequence of this market moving lower, failing, and then we can actually enter. When we enter, we see this market moving higher, and when we enter, we also have a first target is already there. That's the 23.6% of the wall distance from the start of the move to the high above the high. And that's our target. And you will see me often seeing these targets, okay, using these targets. Now, once the market has gone into that target, what happens is, there are a number of rules that they use to model algorithms, and the market actually retraces 90% of that move from the same anchor to high and came to trade into the level. This level again, and the people who follow me, as well as I presented this to the Toronto. Actually, in 2014, it happened that I presented this call at the Toronto Morning Show in 2014, and then in 2015 again I presented the possibility of that level, and mind how that level was retested as well. Very, 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 almost to the tick there, it was retested. So there is clearly something going on there. Now the market came back to retest the level. Would you be would you be surprised that happened? And the 61.8% level, the 1799 has never broken. Now that's the important level. Okay, if 1799 breaks, you can kiss goodbye the SP500. And I believe, and I might be wrong, but if I look at how the market has behaved in the past, what we're going to see, if that breaks, and so far it has not, this level was not broken so far. If that breaks though, what we're gonna see a move lower, a washout, and then the last rally that Wall Street will actually push higher. And hello Bankai, thanks for joining in. So there'll be breaks. So the pattern that you have to keep in mind, it's break, move higher, whereas Wall Street will actually try to sell as much stock as possible to everyone. I remember back in 2006, before the and I want to share this because this is very important. In 2006, I was in Ireland. I was still working there as a IT contractor. I used to work for Accenture as a IT project manager, and at the time, of course, I was fully involved in the markets. And at some point, I received a call, 2006. Someone calls me. I don't even know how they get my telephone number. And they said, "Do you want to buy Google and Amazon?" Seriously? I mean, first of all, how did you get my number? Okay, and secondly, why do you want to sell me that stuff? I mean, it was at the actual top. At the time I didn't know it was the top, right? But something sounds strange. So this guy calls me around this area here and offers me stocks. Okay, so there has been a lot of selling here, and when you see companies, also companies which are actually proposing their IPO at this moment, that's very, very strategic, believe me. Now, that said, there are very good companies as well that is worth buying. I'm not generalizing here or not representing that you should not buy stocks. But the idea here is that, make no mistakes, okay? Wall Street will try to sell you stocks, and it's your decision what you're going to do. Now, I want to sell stocks to them. I want to actually sell stocks to Wall Street, possibly, if that was possible. Unfortunately, that's not possible, and so A potential play here would be wait for this break, wait for the market to retrace, and then and then there are some action that can be there done there. If you don't have a capital, just paper trade, getting experience in a short market will drive your confidence a long way. Believe me, even if you don't have money, if you're committed to this business, you can do that. All right, so I had from Lucas a question. Hi, what are your thoughts on euro dollar after pretty dovish Fed today? So see, I don't trade news, so let's go and look at the chart. That would be my recommendation, Lucas. Okay. Now, if we look at this chart is a total mess. It has been moving laterally forever. Okay. Now, this has been moving laterally forever. Okay, I'm not interested to study the history here, from an history now from April last year to end of the year. So let's look just at the last move here. First of all, we have a lows, highs to lows that has traded, that found participation at that 110.18, and that's real. Okay, now let me give you a little simple way to identify. Unfortunately, only after the fact the market is moving laterally. Okay, and this is very simple. You get your Fibonacci tool, and as you can see, I only have 2 levels in my Fibonacci tool. Would you be surprised about that? Well, you should not, because in reality, what a Fibonacci level is just a way to approximate a level where the market can reverse. And if I used here a number of levels, we will never know which level the market is going to stop. And the reason why I use 2 levels, and only those 2 levels, is because I believe, and I think the practice proves that these levels are used by algorithms. Okay, now this market has been moving laterally basically forever, and I'm going to show you why and how. Well, you can see this. You can see this graphically on the chart, of course, right? Now we need to have something more objective that actually tells us that the market is moving laterally. How do we do that? First of all, there was participation at that 110. Once we saw that participation, and let's go, I always like to go at the hard right edge, because when we are trading these markets, we don't see all the story. That's what we see. So we see this, and we already have this 110.18 level. Will it be respected? We don't know. Okay, but what happened here is that once the market has gone into that level here, the level was kind of respected. Okay, so it means that there is some sort of participation there. So, when I see this, I think there is someone who's pushing this price lower. Okay, and then it's retested once again, second time, a third time, a fourth time, and eventually, it comes off that level. Okay, so when I see this, I have to admit to myself that there is some sort of participation at that level. Okay, and the way I interpret it is that yes, there is actual participation from the markets at that level, from the participants short at that level. Now, if this market is controlled by shorts, to me, I would expect that longs are not able to contrast this market. So if I trace the longs here, the market gets into that level, and now it bounces. Can you see that it bounces? Why it bounces? Because there is someone maybe there, an algorithm, smart money, Wall Street, banks, you name it, that might be pushing this price higher. So in reality, in my model, in my FibStalker methods, price is the resulting of all these moves and measure moves and levels that are watched by algorithms, very powerful algorithms that trade billions in the market yearly, which actually are capable of moving price on a specific time frame. Now, If you look at the description of the room, you will find that I mentioned high volume market, and that's not a case because we want markets that we can kind of foresee, sometimes forecast the level that are going to work well in advance. Otherwise, it's not useful to us. Now, before I get there, and I continue on this analysis, let me share you something that you might want to look at if you want to understand a little bit more how I go in the identification of these levels. Okay, and I have a series on FX Street, and most of the material is also open. Not all the material is actually premium, so you can go and you can have a look at that. Now that said, let me pull this, and let me see if you see the sorry, wrong page here. The right page is this one. Because what I want to show you here is, if you go to my page here, there are a lot of webinars, and you'll see the 2015 webinars, but in 2014, actually I've done a lot of webinars on the FibStalker method as well. And you will go here, the bandwagon theory, the new philosophy in trading success in modern market, traditional new uses of Fibonacci, in which you can see a little bit how I use and define these levels. Okay, so I just wanted to show you this because these are all open webinars and you can go and review them. There are more premium webinars on the method as well, and you can review those as well. And just want to remind also that on November 11 I started the continuation trading system, which is one of the two systems I'm going to use here. Okay, so I just wanted to give you this pointer because this might be useful. So let's continue here with the analysis. So the bulls came into play here, but then they failed. So the bears are in control of this market. Okay, now what happened though also that if the bears are in control of this market, you would expect that the bears, come into the market and keep pushing it higher, it lower. What happens is that that didn't happen. So when the bulls are not in control and the bears are not in control, what does that mean? Can anyone write it down, what it means for this market? So I will get there, Scott. I just want to complete this. So this market is in a total lateral mess. And what happens is that at some point, one of the two level will start working. And what we saw here, we saw 107, 99, 108 started working, but this market is still lateral. So before we can get something sizable and interesting here, Lucas, we need to see this market coming up. Can you see that I have not even mentioned the Fed? Okay, and the reason why I haven't mentioned the Fed is that the Fed has had no impact on this market. In fact, if there was any impact of this market in the last 2 months, you would see that on the charts. While what you saw is just uncertainty and more uncertainty. So until this market comes out of this range, on the 4 hour, yes, there will be opportunities, and we traded some of them. We got freely trades. We got stopped out as well because of this, and this is not the best market to trade at the moment. We want to see markets like this, which are moving, which have very well defined levels. And that's the reason why I like to follow multiple markets, because sometimes you won't have a clear setup on one market, but you will have a setup on a different market. Okay, so I have another question here. Yes, so it's a lateral market, but I showed you also how the lateral market actually is formed. Okay, and why it forms. Scott is asking, thanks Lee for answering that. It's a lateral market. So can you, and the question there was, what happens when bulls are not in control and bears are not in control? Well, we have in a market, a lateral market, which is very intuitive. The point is that we can define that conditions also formally based on the way algorithms are placed. Okay, so before I go to the pound versus Japanese yen, which is not one of the pairs I follow, so I wouldn't need to do the full analysis here. Let me show you how real these levels are, okay? And these are the levels that I call algos. I mean, these are the levels that I model continuously on all time frame, and based on that modeling, I come with trading ideas. Can you see this 154.67 that actually found participation? And when we looked at on the 1 minute, it is very, very evident. On the 1 minute, this wick here that you see in this blue bar, which is really a red bar, was this move higher in the 1 minute. It came to a point where it came to this 54.67, which is this level, this area here, and it reacted higher. Now it's reacting higher again, but second tests are always dangerous tests. So I'm looking forward and to a violation of this level now. And once that level is violated, you can kiss goodbye this market. When the 61.8% level is gone, you can kiss goodbye this market, and we will see lows playing today, and that's what's happening at the moment. Okay, so do the pairs that you want to focus on. No problem, Scott. I mean, you know, I would need to do that analysis, and if you're back tomorrow, I'll do that analysis for you tomorrow. So unless you have something to trade there, and you want me to do it now, so I'll you know, I have different methods that I use. For the FibStalker methods, I look at all these markets that you see here. You will see also some ETFs, and it's not a case that I'm looking at the ETFs, right? Because I showed you that scenario before with the SP500. So this is the inverted triple short small caps here. Okay, so if the market will start moving lower, this is going to go ballistic here. Okay, so this is the kind of plays that you want to keep in mind. I'm not necessarily recommending that you should trade this. You should paper trade this. Read the risk disclaimer. These are just trading ideas for educational purposes. Okay, now, so my promise is, Scott, that if you come back tomorrow, you will see me commenting on the GBP JPY. And the reason why I want to do it, I can do it online now, but it wouldn't be as I want it to be. And so there are other pairs that I follow here, and you know, I still believe that US dollar, Canadian dollar, as I mentioned yesterday, this market is actually trading this area here, and it went to the first target of that area. How real is that? This level that you see here is the first target of this setup here. Look at where the market has reacted. Are this level real? You tell me. Look at where the market has reacted, okay, where profit taking took place. So the news do not happen at random places. There are reason for some of the moves. Okay, not all of them, but some of the moves for sure. So where are we going in this market? We're going lower. Jax is saying along New Zealand dollar, US dollar now from 64.35. Would you think is a good target? My first target is 64.58. So it's a very short-term trade there. Let's review that. Let's review that very quickly, and let's see also what's the logic that you have followed to enter this market. So New Zealand dollar, US dollar, it's here. I always start from a larger time frame because I need to understand where the market is kind of placed at the moment. So you have traded long, okay? So you have traded long, and obviously, you know, to trade along, you have to have a good case, right, to trade along. Now, when I look at this market, what I see is that this market has reacted lower at 0.6883 twice, and this look at the beauty of this level. I mean, went higher to test that again, and that's, by the way, this is a formation they call M4 Marder in my FibStalker method. So now you said you went long. On which basis you went long? Now, if you look at this market, and this is the weekly, uh, as an idea of the long is a good idea, but it might be also a longer term long here. So what we have here is the all the way halfway back, the 50% level from the lows in 2000s to highs in 2011 here, which is the same high that was retested in 2014. So why a long? It's a good idea here because you're trading on top of this level. Now your entry point was 64.35. Okay, so it's actually well above this 50% level where the initial participation was there. So let's look at the daily and see what do we see there. Okay, so when we look at the daily, we always have to look also at whether there are any counter trend move that could actually counter your trade. So you said you entered at 64.35. So you entered very, very close to these lows here, where this market can go. On this time frame, it's not very, very clear. So I will need to go down on the 4-hour because I need to see price structure in order to look at that market. Okay. Now, one thing that worries me about this market is that it has initially respected longs. Actually, not even initially respected longs. Okay. Now, there are two considerations that have to be done on this market. Whenever a market trades a large 50% level, the market can be jagged at the very beginning, might not respect the sequence of measure move at the very beginning, and eventually it does. Okay. What worries me though is that there is this long bar down, and it's very, very important that this market does not start trading or continues to trade in extension charts. Okay, so one level we have to watch for sure, it's the 0.6455, and that would be very, very close to your first target. This market could go higher, although that long bar here would actually suggest an extension. The problem that I have with this long is that there is no valid 50% level below it in the time frames. I cannot see it. I mean, it is much lower on a very large scale on the weekly time frame, but it's not. There is not something supporting this level. Okay, so I don't know what was your logic. If it was previous lows, I don't particularly trust previous lows. The point here is that this market, that we don't have a clear guideline for this market here. If it stops at 64.55, it could actually continue lower into one of these two levels here. If it continues higher, I suppose 64.73 might be the maximum that you might get. So you should change probably your second target to something that is below the 64.73. Okay. All right. So I hope this was interesting. We are approaching the end of this session here. So what I'll do, I'll bring your questions tomorrow as well. What I'll do I will start a recap of this session right now. So what we saw in this session was basically we spoke about a number of markets. I started with the euro, Australian dollar, and I explained why I think today was a very good example of how we should never allow news to actually kind of sway or change our trading plan. And I'm going to show you the charts now here very, very quickly. Let's show again the chart for the euro, Australian dollar here. And as you can see, also on the 4-hour time, it's very, very clear that this market is reverting to its move short here, because this market has actually traded a level 57.10 here, which has target below. And we saw that spike today on the news that this market is kind of almost destined to go and test those levels. Okay, and again, reinforce the idea of the 152.35.30 area as the target. And when we see this market on the smaller time frame, we can see now that it's attacking that area of potential participation long. And we saw that there was real participation long at that level, because look at the week, look at the 13 minutes bar, what it did. And now this market is just dropping lower and will potentially continue to move lower below the 154.38 here. We are likely going to see 153.47. Now, be mindful, that's not a setup, because the setup didn't come at these levels. You might easily be stopped out here. The setup came before at the 155.31 on this time frame, and on the daily time frame it came 2 days ago. So this is the natural continuation of a trade that has started 2 days ago, and we're going to complete very likely this trade by Friday this week. Okay, and you have to be patient if you want to do 10 reward to risk or 20 reward to risk on your trades. You're very welcome, Jax. So then what we did, we reviewed very briefly the US dollar, Canadian dollar. We showed how that first target was actually reached here. That's the first target of this larger measure move here. And we also have a target on the daily target. Believe it or not, this market has to go to find valid participation on the long side of things to 137.70 area, which is this area that is shown here. What I've showed as well, it's a timing, is the timing that we did for the SP 500. I showed it only on the weekly time frame. If you tune tomorrow, I'm going to show you the magic on the daily time frame as well, and you'll see how these levels are so important and respected in extensions, also on the daily time frame. So by no means, let's continue tomorrow on this. The 1797 level was respected, and I mentioned that if the market breaks the level, what I expect or anticipate, because I cannot expect anything from the market, is that the market breaks, moves lower, and then it moves higher, and that could be an opportunity to short this market. Okay, and finally, we reviewed. Finally, we spoke again, and then we reviewed also the euro dollar. I mentioned the fact that this market is moving laterally. I also showed you how to spot lateral conditions when shorts fail and long fail as well. Okay, so I hope you liked and this was useful to you. I look forward to actually see you tomorrow, so we can continue our analysis of this market. And typically, we get a good swing trade every week, but typically we get a lot of opportunities also throughout the week during the Tokyo session, as you will see in the future, as well as during the European session, which is the most traded session of all. So I want to thank you for being here today, and I'll see you every day from Sunday to Thursday, 8 p.m. with FibStalker, and I'll be very happy to share my trading ideas and the analysis with you. Thanks a lot, and see you tomorrow. Bye now.